quite a few slides, so I'll probably go through some of this rather quickly. But the title is A Bubble or a New Plateau. There's been a lot of discussion about that, so we're going to look at some issues that are impacting that and some of the things that may or may not be influencing those values. First of all, all of the a lot of wealth that is in agriculture is definitely in the land. 85% of all of agriculture's assets is in the land. And one of the things that's definitely influencing this market is that the age of the ownership of that land is definitely getting older, and there's a tremendous turnover in this wealth that's happening right now, and the land is a very big part of that. We are in a golden age. We're going to talk about that a little bit. Bull market drivers, some of the things that are influencing the market today. Who owns the land? Who's buying the land? Is this sustainable? We'll quickly go through what we call SWOT exercises, which looks at the strengths, weaknesses, opportunities, and threats that are influencing the land market today. And then we'll end up by looking ahead just a little bit. First of all, one of the things that is occurring definitely in just about every area that where we work, and I'm going to have to update my resume a little bit because Stu said 12 states where we work. We're actually working in 24 states right now. But there is a record demand for land. We've got record land values, record land rents, record farm income, but there is a little bit of differences going on right now because the livestock producers are being impacted by some of the things that are an advantage to the crop producers. And then we have some landowners as well that really haven't kept up with the market and may not be benefiting as much as some of the others. Definitely there are three major drivers that are influencing the market today. You've got ethanol for the corn market, you've got China on the bean market, and then you have monetary policy as well. So we'll take a look at all three of those. 30% of the increase in profit, we've seen a 30% increase in profits in 2007 in agriculture. And obviously that's been a big influence on land values and rents. Both farmers and investors are very bullish on agriculture. Renewable fuels are a big topic and a big driver. You've got an increasing population worldwide and an increasing middle class worldwide. The last numbers I saw, they said the middle class in China is now larger than the total population of the U.S. So that's definitely a major impact that's going on. And then you had the fact that we are playing a little catch-up from the 80s, 90s, and even into 2000s with land values. And then interest rates are a huge influence in the market as well. This shows some of the things that's happened with the return on agriculture and what's happened, why some of the things that we're seeing are happening. You can see where it took a huge jump in the overall returns in 2004. And then we've maintained a very, very strong competitive return since that time. The value of the land obviously is based on the productivity of that land, and all of that goes directly to soil type. You also have the influence of field size can dictate value, location, improvements, and then local demand is a huge factor. I just mentioned the $21,900 an acre sale in Sioux County. Definitely local demand. You've got an area where you have a lot of livestock that's being produced, so you have the demand from not only from people that want to grow their operation, but if they want to grow their livestock operation, they have land to put that manure on. So you got that double up factor as well. And then there's nothing that ever comes up for sale in that county. So you got that factor as well. So income is a driver. It's definitely a big driver that over the last few years when we saw the level of overall income jump on farmland. But local demand is very important. Income is very good today. Can it continue and allow these higher land values? One of the things that we look at, when you look at land values and land returns, that PE ratio or price to earnings ratio for land is now about 30. You compare that to the stock market, which is currently at about 18. So that it makes you stop and think a little bit. but there's a lot of factors that go into that consideration and why that is occurring. Take a quick look at a sample income analysis. We saw one earlier here for the group that was in this room earlier, but this is something we do for our clients when we, on the properties that we manage. We take a look at the opportunities that they have out there and do what we call an investment analysis and compare rental returns for different types of leasing operations and methods of operation. This is a sample farm. We just took 160 acres, 156 acres tillable, analyzed it with a $350 cash rent, figuring 192 bushel corn yield, and you can see the other factors that we figured. We figured $6 corn, $13 beans, and then $85 an acre for custom costs on corn and $60 on soybeans. As you can see, there's quite a bit of variability in terms when you look at these for that landowner, all the way ranging from $438 an acre on the custom to $284 on 35% net share lease. Obviously, all of these factors can vary from area to area, and those rent percentages can vary as well. Everything becomes negotiable at some point. But when you look at that, this was 160 acres that was purchased at $6,500 an acre, and you can see the return on investment that they're looking at for that purchase. You know, I know a lot of people, guys right here would look now would love to be able to buy a farm for $6,500 an acre, but this was the example that we picked for this one. And then when you look at it on a custom basis, you can see what that net return looks like for corn and for soybeans, over $500 an acre on the corn versus $418 an acre on soybeans. So you can see why more and more people are at least taking a look at custom and willing to take some of that additional risk to get those kinds of returns. In our shop, you can see that, you know, of the 5,000 farms that we manage, about 44% of them are cash rent. That percentage continues to increase. 36% of them are crop share. That percentage continues to go down, just for all the same factors that farmers want a cash rent, and some of the landowners want more of the fixed income so that they know what they're getting. But also what's going up is the blended and custom operations that people are looking at some of these potential returns and are willing to take more of that risk and operate it on a custom basis. The blended custom, it's the terminology we use, but it's where you, instead of paying a flat rate per acre for the operation, you negotiate a percentage of the crop, so everybody at least participates some in what's going on with that crop. Non-operating owners own 57% of the land. I know in Illinois out here it's at least that, maybe even closer to 60%. 75% of them are over the age of 65. You know, many of the absentee owners that own the land inherited it. Some of those are buyers now. They're looking to add additional acres to their land. Most of them, and these are surveys that we've done on our clients, and we ask them these questions. We ask them what their long-term plans are. By far the biggest majority of them want to continue to own that. They want to pass that farm down to their heirs, just like most people in this room. Some of them will gift the land. Most of them want a cash rent. 95% of our sales come from this group, and I think that's understandable. You know, most farmers are not sellers, they're buyers, and it's the landlords that end up selling their land at some point. When you look at the overall population of farmers out there, this is from the USDA, you know, 2/3 of them are what are called residential farmers or hobby farmers, but they only account for like 6.5% of the farm revenues, while over 93% of the operations account for over 80% of all farm income. And the average off-farm income for these hobby farmers is $82,000. So you can see most of their incomes comes from something else where they Their farming operation, like I said, is more or less a hobby. Commercial farms, like I said, account for 93% of those of all operations. They average over 1,600 acres, and their total earnings average about $182,000, and nearly all of their income is coming from their farming operation. Current farm operators, average age is about 55 years of age. That's really been staying pretty steady. I know when I came out of college in the 70s, that was about the average age at that time as well. But what's been interesting to watch is that we've actually got another generation coming back to the farm now. That's something that really hasn't occurred since the 70s. When I graduated from college in 71, about half of my class, or at least the guys that I knew in animal science, went back to the farm. That hasn't happened for a long time, and we're starting to see that again. So it's kind of nice to see. There's enough income in these farming operations that they can afford to bring in another generation. Most farmers, upon retirement, do cash rent. A few will sell their land. Most of it's going to go to their kids, and a lot of these kids are going to then become non-operating landowners that are going to be renting out their land. And our experience is about 3 to 5% of these people are going to sell their farm on an annual basis. So there is some turnover that's going to continue to happen on land going forward, as we've seen in the past. When we look at who's buying the farm, well, first of all, farmers are the predominant buyers in just about all areas. When we look at our sales records, 70 to 80%, and I think that's a real conservative numbers. In a lot of areas, I think it's 90% of the sales that we have are purchased by local farmers. But there also are investors in the market, and I'd like to talk about that a little bit, in that there's really two types of investors. There's what we call the traditional investor, and those are people that are the non-farm owners, people that either grew up on the farm, they understand the farm, they're comfortable owning farms, and so then when they buy a farm, they know what to do with it, they know how to handle it and things, etc. But what's new to the market the last few years is this new investor. These people have read about agriculture, they're seeing what's happening with agriculture, the profitability that's come into agriculture, and they say, well, I'd like to participate in this, and I'd like to diversify a portfolio, I'd like to buy a farm. But it's been interesting, they'll call, and I'll talk, and when they call, I'll visit with them, and you really have to go back to Farming 101, because they know nothing about farming. They'll ask you what you're going to plant, they're going to ask you why you plant those crops, when you plant those crops. If I get a crop, what do I do with it? I mean, you really have to go back to Farming 101. And for a lot of these people, it takes a 6 months to maybe even a year of educating themselves about being comfortable owning a farm before they buy that first one. And it's been real interesting to work with some of these people, and it's really been kind of fun. But most of those investors have very specific numbers that they're looking for return. And if they can't hit those numbers, they don't buy. And so that's been our experience, at least. And most of them, when they first came into the market several years ago, they were looking at 4 to 5% return. They've kind of adjusted those numbers down a little bit now, maybe 3.5 to 4% is what they're looking at. And if they can't hit those numbers, they'll move on and try to buy another one, because they're very specific on the return they're looking for. Last year, I need to update those numbers too, but we sold about $650 million in farm properties last year, a little over about 850 properties. Most of them by auction. We sold about 260 auctions last year. That's just been a function of the market. Whenever you have a market like we have right now, where the demand is that high, when you have a good farm, the best way to usually sell it is by auction. And so that's why that's been a big driver. Something new that's really been interesting is, like I mentioned, the 80-year-old cash buyer. Typically, they have not, people of that age have not been buyers, but we had one just recently. A gentleman bought a farm at one of our auctions. It was about $1.5 million, $2 million purchase, and sat down with him to write the contracts. And I just asked him, why'd you buy this farm? He said, well, I had this money sitting in a CD giving me about a 0.5% return. I can put it in this farm and I can get at least 3% out of it. Seemed like a no-brainer to me, and it really was. So, you know, he was a retired farmer himself. He felt comfortable owning the farm, and took his money out, bought another farm. So, investors have been, I think 25 to 30% is probably a high number, but maybe 20% of the market. Like I said, you have the traditional investor and then the new investor as well coming into this market. As we well know, farmers that buy farms generally buy it for a lifetime. When they buy a farm, they want to own it for their lifetime, and they hope for their kids' lifetime. But the interesting part in talking about these with the investors, they also have a very long-term look at owning farmland. Every one of them that I asked, I said, how long do you want to own this? And they said, well, at least 20 years. They understand that farmland is not something that is a short-term investment. So it'll be interesting to see if that continues for those people that have bought farms. If they see a profit, will they take it? I don't know. That's going to be kind of interesting to watch. Leverage. There is some leverage going on in the market right now. This is a study that was done by Purdue, Craig's University. 246 respondents, 73% own land, 74% want to buy more land, 26% are going to borrow money to do so, 11% are going to be using savings, and 63% are going to use borrowed money with cash. And so I think that's pretty typical all over. There's a strong demand, again, from all sectors. There's more buyers than sellers in the market. Several new funds are being formed. We continue to get calls from new investors wanting to participate in the market. There's just a ton of cash pouring into this market, which has been one of the major drivers pushing values higher. And for all of the reasons that people are wanting to come in to buy more farmland, people that own farms want to keep it because it's a good investment. So you've got both dynamics working against each other to push sales higher. Currently, we've had a 30% increase actually in sales over the last year, and a 40% increase in volume. But a lot of that, at least what's going on right now, I'd say probably 50% of our sales that we're doing right now, the people are calling and saying, I want it sold, I want it closed this year, just because of the potential changes in the tax laws coming up January 1. So that's a big factor in the increase in number of sales that are occurring right now. The search for quality continues. If you've got a high quality farm, you're going to get, in any area, there's going to be real strong demand for it. Most of the increases that we're seeing, the big prices we're seeing, are for those top quality farms in those local areas. We're seeing some fallout back to some of the, I'd say a B grade farm versus an A grade farm just because of price resistance in some areas. Maybe they aren't willing to pay that $12,000, $14,000 an acre, so they'll move back to a B grade farm and try to get something bought for 8 or 10. We're seeing some of that, but again, the demand really is on the high quality farms. Is this sustainable? Quickly going to go through a SWOT exercise and talk about this a little bit. The strengths, in my mind, the number one strength that we have in agriculture is that we produce a product that's real and we produce a product that is needed by the entire world, and that's food. That is really the strength of our entire industry, I think. We've got relatively low debt. Farms are historically held for a long term, so there is a low turnover. And like I mentioned earlier, good, strong profitability over the last number of years. Increased usage of our products. We've got more ways to use the things that we produce. Increased productivity has helped increase the profitability. And livestock prices have been good, at least up to the first half of this year, but there's been some pressure on them as well. And the reality of it is that our production has just been keeping up with the overall world demand. And now with the drought we've had this year, with the reduction of inventories, we're going to see that demand really, we're going to have to ramp up our production to keep up with that overall worldwide demand. One thing that we are watching is that these high prices are bringing more acres into production on a worldwide basis. So that's, there's always that threat of those more acres producing more crops. Moving over to weaknesses, the thing that I see when you talk about potential weaknesses, whenever you have volatility, in my mind, it creates a threat of additional volatility the other way. Whenever something goes up as fast as it has, it just causes a concern in my mind. When you see land values going up, 30, 40% a year and across the board in some states, that can't go on forever. It's interesting, I was telling somebody, I just did an interview about 6 weeks ago with a magazine, and in that interview I said it looked like these increases were moderating some versus what they've been the last few years. I said maybe it looked like a 10% increase this year versus a 30% like we saw last year. And then I got some of our auction results here for the last couple of weeks, and it made a total liar on me. Because I think we're going to be up at least 20% again this year. Just really, really strong prices this fall. Livestock prices volatility, the drought impacted, definitely impacted livestock profitability, and it's going to continue to do so. Population growth continues for the opportunities that we're seeing moving ahead. There's just going to be increased demand for our products. And what has been interesting to watch is that even with the stress we've had in the worldwide economy, they've still used up all of the products that we've produced. So in my mind, if the world economy ever does straighten out and we start seeing some growth again, that's just going to increase the demand for our products. A weakened dollar has been also positive for our exports. And land has always been looked at as a safe haven investment, and I don't think that's ever going to change. The low cost of money is very, very positive for us. And then the tax law changes are definitely impacting the market at this time. Short-term effects of the drought are going to be a threat in some areas just because of reduced profitability. And long-term, reduced commodity prices are always a threat. It's something that's we're going to have to watch because we definitely can't overproduce ourselves into lower commodity prices. Higher interest rates, we can't keep these interest rate levels forever. They've got to go up sometime, so whenever they do, that's definitely going to impact land values because it's just going to increase the cost of ownership of the land. Like we talked about, overproduction continues to be a threat and could be a threat for commodity prices. Worldwide recession has definitely impacted us over the last couple of years and will continue to do so, it looks like, for another year at least. The ethanol subsidy is gone. There's always the threat, if they take away that mandate, there goes a chunk of our demand. So that's something we're definitely going to have to watch moving forward. If you compare the overall returns in today's market versus the 70s and 80s, you can see that 176% growth this last decade versus 122% back in the 70s. So it's even been stronger than the 70s and 80s. We talked about the increased values, and you can see that really strong increases across the entire Midwest. 20, 30, almost 40% increases last year in land values across the entire state. Just tremendous increases. This is a survey we did of our agents and asking them to compare land values from June 1 of this year back to June 1 of last year, and you can see what they reported across the states where we work. Most areas we were looking at anywhere from a 15 to 20% increase at that time. Just want to give you a quick update on what we've seen as far as changes in land values in specific areas across the Midwest. This was in Northwest Kansas. When you compare sales October of 2010 to October of this year, you can see land values jumped from $12.30 an acre to $27.75, almost doubled in 2 years in northwest Kansas. Northeast Nebraska, again, 2010, $43.50 an acre, jumped to $7,700 an acre this year in 2 years. Central Nebraska, 2 years ago, land values were in that 5 to 6 range. They were kind of lagging behind. They didn't increase as fast as what we saw, particularly in Iowa, but then they caught up real fast. They jumped from $5,700 to $11,000 an acre in a little over a year, and are holding at those levels right now. Northern Iowa, Wright County, September of 2010, $56.75 an acre. To August of this year, we had a sale, $11,200 an acre. So tremendous increases there. Southern Minnesota, the same thing, $68.75 an acre. This is in southwest Minnesota, up to $9,400 an acre this year. Northwest Indiana, Benton County, from $75.75 an acre, 2010, up to $11,470 this year, and I know there's been some higher than that. In the Mid-South, jumping from about upper 2s 2 years ago to the upper 3s now. This is on irrigated, precision leveled land that's capable of growing rice. This one's really interesting because our shop up in Fargo, the guys out there did a sale in 2011, December, just a year ago. Sold 2,700 acres, averaged just over $4,000 an acre. They came back and did another sale in that same neighborhood in September of this year. 480 acres, jumped to $65.50 an acre. Then came back, did one a month later, another auction, 617 acres, $7,000 an acre. So those land values in that neighborhood jumped 50% in 1 year. But they had good crops up there, 180 bushel corn up there in Red River Valley. The drought is not affecting the markets yet. In most areas, there's still strong demand. Supplies remain limited, and it looks like we're going to have a good land market into next year as well with the good commodity prices that we're seeing right now. Current tax laws are expiring, like I mentioned earlier, so that is bringing some more land onto the market. So if these are all implemented, these tax increases, capital gains rates are going to go up over 50% for the people selling next year. So it's going to be interesting to see what that does to the market the first half of next year. Just a comment: we had one Wall Street firm that we handled a sale for that is liquidating their portfolio. When they bought that land 5 years ago, they said their intent was to own it at least 10 years. Well, they changed their mind. They said that they decided to liquidate it just because of the prices that they were seeing, but they also thought they had a better opportunity to move that money into energy at this time. So that's, again, it's going to be something to watch. Investment alternatives are not good. It's one of the other drivers as well. So people they feel safer putting their money in land and than into the stock market. Is this sustainable? Well, if commodity prices remain strong, if interest rates remain low, if renewable standards remain intact, and if the Chinese economy continues to grow, yes, it's very sustainable. But if any of those factors change, and when they change, it's definitely going to be an impact in the market. We are in the golden age, and I think it is going to continue into the near future. But we do need to remember that we certainly can overproduce ourselves out of this market. So it's something to watch, and it's going to be something that we're going to be monitoring as we go forward. With that, I thank you, and I'll turn it over to Craig.